Welcome back to the Tuesday Target Audio Edition, issue 31 of 52. Yuri titled this one, Empty Racks, Full Balloons, and once you hear why, you'll see the whole market in that image. 3 stories, 1 lesson. In his words, every war runs on ammunition, and the quartermasters just spoke.
Start in the Gulf. 13 straight nights of American strikes, then suddenly, diplomacy. The timing gives it away. Leaks showed the Pentagon's stock of missile interceptors running thin, right as the bond market started creaking. Yuri calls it a reload pause. His line, presidents preach peace when the racks run low and portfolios bleed.
And markets bought the peace instantly. Oil down 8%, stocks exhaled. But the physical market never joined the party. Real barrels still trade above $90. 8 ships crossed Hormuz on Sunday. 8. Saudi tankers are detouring a month around Africa, some sailing with their transponders switched off.
So the paper traders relaxed while ship owners and insurers plainly haven't. Meanwhile, Wall Street fights its own war, the AI buildout, and its ammunition is borrowed money. Nearly $500 billion of fresh AI debt this year, and the cost of insuring those bonds just hit record highs. The lenders are twitching.
Then the image that stuck with me. Nvidia dangles a $250 billion backstop so its biggest customer can keep buying Nvidia chips. Yuri's phrase, the financing has become a balloon inflating itself.
Which sets up the pin. Beijing floated its memory champion, CXMT, into a 470% debut, $500 billion of valuation, minted in one afternoon, while rolling out domestic chip-making machines that gnaw at ASML's monopoly. Yuri's verdict, Washington's export bans turned into Beijing's training program.
There's an accounting twist too, and it deserves a slow read. The 5 biggest AI spenders pour roughly $725 billion into capital projects this year, yet only about $211 billion lands on income statements as depreciation. Profits look shiny while the cash drains. If chips age faster than the books assume, that deferred bill arrives early and heavy.
Now Wednesday, futures price roughly a 1 in 3 chance of a rate hike, which makes this the rarest thing in modern central banking, a decision nobody can front-run. Under Chairman Warsh, the old blackout leaks have vanished. The letter's base case, a hawkish hold, 1 dissent, and a press conference built to keep everyone guessing.
And the calendar offers 0 cover. Microsoft and Meta report Wednesday, right after the Fed. Thursday stacks GDP, the Fed's favorite inflation gauge, and the Bank of England, before Apple and Amazon. Friday closes with the Bank of Japan and China's data. Thin summer liquidity amplifies every landing.
Which brings us to the options corner. Get rich overnight with options? Yeah, right. Single stocks are thrashing while the index naps because correlation between them just hit record lows. That leaves index volatility artificially cheap. And Yuri's line says it all. We rent the nap and own the wake-up.
The structure sells September options at the edges of the summer range and buys the same strikes in October, collecting daily decay while staying long volatility into the pre-election chop midterm years love to deliver. Food for thought only. Official entries live in the trade alert section.
So count the magazines, interceptor racks, credit spreads, IPO war chests. Whoever reloads cheapest keeps shooting. Everything here is purely educational, so do your own homework. Read the full letter, and we'll see you next Tuesday.